Hey Pravesh, hi Leela. I hope I'm audible.
You are audible, yeah.
Yes, you are audible.
We can hear you.
Hey Aditya.
So we'll just get started in the next few minutes. I think people are still joining in.
Sounds good. Sure.
Yeah. So guys, should we get started? I think we have a good audience and others can keep joining in. Leela, Bhavin.
Yep, let's go.
Sure, Aditya. I hope my screen is visible as well.
Yes, it is. It is. So good evening, everyone. Thank you so much for joining in for this very, very important session on regulatory reporting by alternative investment funds. Of course, our speakers for the day will take you through all the things that are happening on the background when it comes to regulators, and how they're going about bringing some very, very important and interesting changes in the AIF ecosystem, and how all of you as participants in this sector can update yourselves and be on the right side of all the upcoming regulations. So today we have with us three member speakers from the Equalifi Member Organizations. Let me quickly introduce all of you. Our first speaker for the day is Mr. Bhavin Jatania. He's the head of products at 361 Asset, which was formerly called known as IFL Asset Management. Our second speaker is Ms. Leelavati Naidu. She's a partner with regulatory and asset management practice at IC Universal Legal, one of the prominent law firms working in fund formation space. And our third speaker for the day is Mr. Pravesh Jain. He is the lead for operations for AIFs at 361 Asset. So welcome, Bhavin, Leela, and Pravesh, and thank you so much for taking all the efforts and time for this important session for all our audience here. Audience, before we move on, a quick introduction to Equalify. For those who are new to Equalify, who are not yet members, Equalify was earlier known as AIWMI. We've been working in India since 2013. And now we are a first of its kind membership community for financial services organizations and individuals. We currently have 65 corporate members, 2,000 plus individual members, and roughly 13,000 enrolled candidates in various education programs in finance. We work very closely with the industry, with regulators, with government on various initiatives that help the industry in developing the professional standards, and which also help investors in getting more empowered and more educated. More about us, you can always find on our website, www.equalify.org. And if any of you are keen to know more or participate more on our initiatives, I'll request all of you to reach out to our team after the session is over. So without further ado, I think let's quickly get started with the session. Bhavin, Leela, and Pravesh, over to you. And audience, if you have any queries, you can of course keep asking us through the chat window during the session or towards the end of the session.
Thanks so much, Aditya. Thanks to Team Equalify for setting this up and for all their efforts in helping with all these industry regulations and circulars that keep coming in on an ongoing basis. Before I start, thank you so much to all the participants. I see more than 250 and counting joinees on the call. Thank you so much for joining in. Over the next hour and a half, and hopefully we'll be able to take a lot of time for your questions at the end. What we plan to do is take you through the recent circular that has come in from SEBI on reporting norms for all AIF schemes. And maybe before we get into specifics, I'd just take 2 minutes to give you a quick summary and list out the key actionables from a organization or from an AIF fund expectation point of view. I think the first thing before I get into specifics is to acknowledge and really appreciate the way and manner in which this circular has come about. I think it's refreshing to see SEBI take feedback from various industry bodies, key industry players put together in formulating these reporting requirements. I think we've had a great dialogue and healthy dialogue with SEBI prior to this implementation, and a lot of points which we'll come to in a bit that was set forward by the industry, that were suggestions from the industry, were gladly accepted by SEBI, which is a great starting point. I think from the other good point from an implementation standpoint is I think SEBI clearly understands the complexity and the number of members in the AIF space, and the fact that any new regulation will take time to implement. And that is very clearly reflective in the timelines that the regulator has published. So what has happened is basically SEBI has come up with various fields and manner and formats in which reporting needs to be done by every AIF. But the implementation has been done in a very methodical and time-tested manner. So firstly, from 31st December 2023, that is the date which is a quarter and plus from now. That is the date from which this circular will be fully effective, which means that all AIFs will be expected to report as per this format set out in the circular and hosted by Equalify, all the fund activities in this format from 31st December onwards. The deadline given to all AIFs is 15 calendar days from the end of the quarter. This is another great move by SEBI. If you would recollect, the earlier deadline used to be 10 days from the end of the quarter. So SEBI has also given us additional time as an industry, as funds put together, to put across these data points and make the submission. The submission will be done as per the portal, at the portal, as per the guidelines given by SEBI. And the other very, very interesting and useful measure that SEBI has taken is that they have also taken the opportunity to give industry participants 2 quarters of data upload or submissions as a proof of concept or a trial run before this goes live from 31st December. So for periods ending June 30th, 2023, all your old data and submissions that you did to SEBI as AIFs need to be submitted as per the new format again as a trial run for SEBI to ensure that this portal is working smoothly and that we are all familiar with the upload method. So for the period till June 23, the old data that has already been submitted in the new format, all AIFs need to submit this by the 15th of October. And then for the quarter ended July to September 23, which is just the quarter ending, where as per our old formats, as per our old requirements, we will file the data between 1st to 10th of October. After that is done, SEBI has also given us a window of 35 days, which is till 15th November, to again submit data as on September and as per the new format. So what this does is give everybody a very good trial run in ensuring they understand all the functionalities and all the fields and the data requirements that the regulator has come up with. And you will see when we go across the various kind of sections that SEBI has come up with, I think in spirit, if you really look at it, and if I were to just list out the key reason for this change, I think you have seen significant changes coming about by SEBI across various areas of fund management and governance. But if you see the old reporting format, I think the reporting format wasn't complete for members to be able to provide all the data and clarify and certify that all the new regulations, like for example, on upfronting of distribution fees and so on and so forth. So that is why this enhanced format has come into effect. And also what happens is this sets up a platform for there to be complete uniformity and clarity between all industry participants and the regulator. There are several nuances which we'll come into, but these were all changes and simplifications done by SEBI at the request of all the industry participants and Equalifi in particular. So for example, earlier the corpus related information had the requirement of posting cumulative investments, which was then done away with. Similarly, when it comes to divestments, the earlier format had details of transaction level details, which is now done away with. Category 3 schemes are only requested to provide information on unlisted securities, which in earlier avatar had all holdings, which made it very onerous. So those are kind of, and we can go on and on, but I think it's best to delve into each section. So what we've done is we've clearly listed out the sessions and the schedules that SEBI has come up with. And between the three of us, what we'll do is quickly take you through each of those sections. We have clearly put out clarifications and logic in terms of how these various fields are to be calculated. So I think in the next 45 to 50 minutes, we'll just take you through that in complete detail. And then we'll leave the last half an hour for any questions and answers. Keep populating the chat window. Feel free to drop in questions. But I think from a flow perspective, would be best if we take these questions at the fag end. So that's broadly what I wanted to start out with. Over to you, Leela. Leela, you're on mute.
Thank you, Bhavin, for setting up the context very well. Let's quickly start because we have a lot to cover in the entire 1 hour. We'll start with the general information on AIF. This is pretty much the same information that used to come at some point in time with few additions that SEBI has asked for, which is basically address of the sponsor, because SEBI believes that whenever they're trying to get in touch with sponsor, manager or trustee, they're not able to, and they want an updated address. That's the intention, to capture these information. And now with large value fund for accredited investors, if you have a scheme under the main AIF, which is a large value, but not the main trust, which is registered as large value, this answer will be a no for you. Then we move on to co-investment. The intention of SEBI basically was here to capture all the co-investment that you're offering, but we had to really push SEBI to say that this entire information comes under the portfolio management services, and it will be a breach of conflict if in case we start pushing those information here. That's the reason if you see only primarily the intention is captured whether you have facilitated co-investment or not. Whether you have charged fees or not does not make a difference, but you have offered co-investment as is envisaged under the regulations. You have to say yes, and whether you have offered it under the CPMS, whether you have registered yourself over there with a registration number, this is the detail that SEBI intends to capture over here. Moving on to the very important information that SEBI is expecting, which is the key management personnel. Please note, it does not capture only key investment team as you would have written in your PPM. There is a SEBI circular which talks about key management personnel. These are the people which includes your key investment team plus individuals who are identified as key management personnel, which is your CEO, CIO. Those entire information has to get captured over here. The date of appointment, if you see, needs to talk about the date of appointment in the fund. For example, if your CIO has been right since the inception, but you launched the fund after 4 years of inception of the company, so that will be the date of appointment and date of resignation. With this data, what SEBI intends to capture is if there is a SEBI circular which says that if there is a change in the key management person, it has to be immediately informed to SEBI. If there is an information which you have captured over here and you have not informed to SEBI, there is a pushback that there will be a non-compliance reporting that will come again. That's the reason it's important that whatever data you capture, ensure that the information with respect to the key personnel is informed to SEBI and to the investors periodically. Bhavin, we can move to the next slide. Yeah, so here is the information on the scheme. Please note this information is for the live schemes. The schemes which have got wound up has to be captured in the earlier slide, which is the first slide of general information, which we just discussed. Here, in case all the information are typical that we usually capture, except for the point where the scheme or liquidation scheme has got captured. Basically, if in case you have a scheme which is getting wound up and has not been able to sell a security and you intend to launch a liquidation scheme, have you launched it or not? This is the information. The date of filing the final draft PPM, if you see the column number E, is the first time when you file your draft PPM. As you would know that once you get a SEBI approval, after that people are habitual to change a lot of commercial understanding and again filing with SEBI. That's not the date that is being expected here. This date has to precede the SEBI approval date. If you see, there is a record called column number F. So this date has to be superseding the E column. That's the reason it's important that the first time you file it on the SEBI portal, that's the date that should get captured over there. The second date is the one where SEBI communicates you that it has taken the PPM on record. The intention is there is a SEBI circular which talks about launch and initial close of your fund within 12 months. That's the intention to capture this information, and SEBI very important to capture the correct date over here. Then you have initial close and commitment received. Please note, commitment received is the gross commitment, not the net commitment. Basically, usually we have a lot of questions coming, whether commitment minus setup expenses, commitment minus 1/3 of the placement cost that we take, whether this will be net or gross. This has to be pure gross commitment that you have received from your investors. Then you have date of final close in case you have a close-ended scheme. We move to the most important section, which is the details of the tenure of the scheme. If you come to column number C, what it intends to capture is how much is the tenure. Earlier, if you remember the format, it used to just talk about the total tenure and to leave it just the way it is. Because there is a circular which talks about launching further schemes after the tenure and launching liquidation schemes. Now, if you see these details are very well captured. Now it talks about the original tenure. Plus, it talks about whether your PPM term talks about the end date, whether you have intention to extend. After the extension, what has happened? What is the end date after the extension? So if you have written in your PPM that will be extended for 1 year, you will just put +1 over here, which is basically if it is 2023, you will just add 1 more year and add it. If the intention in your PPM is 2 years, you will accordingly do the extended term, which is a very important information to capture. Sure. Then we go to the next section, which is to be filled in the scheme, which is the scheme beyond extended term. First is whether you've intimated SEBI of winding up. If you're fully liquidated, you just have to put the date at the end of the liquidation period. The end of liquidation period is, Bhavin, can you use a mouse? Somebody has just posted a comment. They're not able to identify which column are we talking about. Yeah. Yes, absolutely right. So beyond the extended term, so we are at column number G, Bhavin. Yes. So if in case your fund is fully liquidated at the end of liquidation period, your liquidation period as defined, for example, your tenure got over on 30th of September, you have 1 year from 30th of September to liquidate your entire stocks and pay and do distribution to your investors. So that is a liquidation period. So if you have wound up completely within the liquidation period, so you have to give an answer as yes. If the answer to that is a yes, you have to give the last date when you did the payout, which is column number H. Then you move to the next scheme. In case you have not been able to wind up all your stocks and you intend to launch the liquidation scheme, then you need to start whether you have received a consent. As you would know, the process is you need to take 75% consent whenever there is a winding up happening and you've completed the tenure. You have not been able to sell the stock, you need to go back with the investor with an option to say, hey, I need to launch a liquidation scheme, give me 75% approval. If you do not want a liquidation scheme, do you want an in specie? Again, a 75% approval. If none of the options have been chosen by the investor, then you move towards mandatory liquidation or in specie distribution at the face value or at the value of ₹1, which is stated under the SEBI circular. So that is what is getting captured over here. If you see column number I, whether have you received consent for liquidation, you have to give an answer as yes. If you, in case you have received, whether no, did you choose an in specie, you will have to choose one of these three things. In case it's an open-ended scheme, in case in a scheme which is not under a liquidation, you will straight away say NA and you are done with it. So that's the requirement that you will have to capture over here. Bhavin, we move to the next one. So now here we capture the details of liquidation scheme exactly as you would see the details that are getting captured over here are as per the circular. So what is the name of the liquidation scheme? It is mandatory that in case you launch a liquidation scheme, the word liquidation has to form part of your main scheme. So for example, you did ABC India Equity Fund. So you will say ABC India Equity Liquidation Scheme. That will be the nomenclature of your scheme. So please be careful when you write a name of liquidation scheme. Date of filing of liquidation scheme and date of launch. Very important to note, liquidation scheme PPM does not get approved by SEBI. The day you file the PPM with the SEBI, that's when your tenure starts. And that tenure cannot be beyond the original tenure of your scheme. For example, you launched a fund which is 5 years from the initial closing. The day you launch your PPM for liquidation scheme, your 5 years starts from there, and it is not to be considered the extended term. For it was 5 plus 2, 2 cannot be considered, so it has to be 5 years. Hence, important that you capture the date over. You file your PPM in such a way that you're very nearing to the closing of your liquidation tenure, and then you launch the liquidation scheme so that the dates all match together. So that's the reason it's important that you capture, and that's the reason this date is also getting captured over here, which is when did you file, when did you launch, because your tenure has already started from there. Your tenure of liquidation scheme cannot be beyond the original tenure. If there is a difference in the date, there will be an error when you upload this report. Hence, be careful when you write the tenure of the liquidation scheme. Cost of unliquidated investment is the original cost. As you would know, SEBI circular talks about taking a bid and then if not receiving a bid, then moving it at ₹1. So that's not the cost that is expected. Cost of unliquidated is the original cost that is reflecting in your books in terms of your unliquidated investment. So that's what is expected to be included in column number F. Then again, we go back to the liquidation scheme, which is basically unliquidated investments. How much bid you have to ensure that you get 25% bid. So you have to write a number over there. The value of the bid received. You also need 2 independent valuers to give you a valuation. So that's the valuation that you need to write. And date of winding up of the scheme and date of launch should be commensurate, because the day you launch a liquidation scheme and you move the assets, that is the day you wind up your original scheme. Hence, important that your date matches and it's commensurate to each other. End date, for in case your liquidation scheme is running, it will be NA for you. If in case even you have done with your liquidation scheme, then you will put an end date to it as and when it comes. The next is the in-specie distribution. As you would know, if your investors have not consented for a liquidation scheme, everything will be NA for you. If your investors have consented for in-specie, then you will put in those details. Again, the cost of unliquidated is the original cost, which is the book value cost that you're reflecting in your original scheme. And again, the same process, which is how much bid you have arranged, how much the value was received, when did you do the in-specie, and date of winding up of the scheme. Then you move to the third option, which is your investors neither consented for a liquidation, neither consented for an in-specie. Then the third column is where you will put, if in case you do not have an information to capture because either you're an open-ended scheme or you're paid out all the money, everywhere you will put in NA, NA, NA or null for you to ensure that your data gets uploaded. We move on to the next slide. Yeah, over to you, Pravesh, for the operational data, please.
Yeah, thanks, Leela.
So Pravesh, before you start, just a couple of common queries that we are getting on chat. A lot of messages saying, is this going to be recorded and posted? Yes, absolutely. It will be available on the Equalifi YouTube channel. Please find a link to that on the website. And on the other queries, we'll just use the chat window as and when we can. But if your question is not taken, we'll just take all the questions at the end. We have enough time buffered for any Q&A. So please put your messages and wait for the presentation to get over. Over to you, Pravesh.
Yeah. So, so Bhavin, can we go one by one? That will be better.
Sure.
Yeah. So this is the sheet in which we are providing a detail of a corpus completely. And these details will be everything at a cost level. So basically in this total commitment received at the end of the quarter, which is technically called as a corpus, we will consider. So just to set in context for this particular sheet, which is very important and in detailed one. So whatever we used to provide, we always used to give these details to the SEBI in our earlier reports as well. But this time SEBI has come up with the proper clarification and definition to each and every columns, which will create and give the final correct and not only correct, but give a in sync output from the industry. So everyone will be giving the same and equivalent data to the SEBI with having a meaning in a same manner. So earlier we used to give data in the as per the understanding of each and every individual, which could be a different earlier. But now we are setting it in a specific definition and giving a same data. So in this total commitment received, we will be giving, which will include the transfer cases, transmission cases, and principal repayment will be included in the total commitment, but we will exclude the exits, forfeiture, and the reduction of commitment. And accordingly, it will be a gross contribution or a commitment for the open-ended scheme, because technically in most of the open-ended scheme, the gross contribution and the commitment is the same number. Absolutely the same number will be given into the cumulative fund raise, and that will be in a sync to the column B, which is a total commitment. So whatever the commitment we are providing here for what all investor at a cumulative level, we will give absolutely the fund raised from those specific investor only in the cumulative fund raise. And the specific and proper definition, if you refer the SEBI format, the Excel version which we have received, the definition for each and every column is appropriately given, what we need to give and what we should not. Yeah, Bhavin, next. So then subsequently, cumulative portfolio investment made at the end of the quarter. In this column D, we will give all the investment. So cumulative amount of the investment which we have invested into through the fund since the inception of the fund. So we will give the total amount here, and simultaneously we will give the total cost of divestment, all the sales and divestment at a cost in this particular column called cumulative cost of divestment. So net of these both will show us the holding and as of the quarter end or as on the period when we are reporting this statement. Temporary investment made at the end of the quarter. This will be the amount of the holding of a temporary investment, which will be captured here. Yeah. And the cash and cash equivalents. So cash in hand. So this is the specific tab added this time. So cash in hand will cover your cash and bank balances with a specific definition, and the capture will have been provided by the SEBI this time. So we will include contract for sale here, and we will reduce the advance against sale of the securities. If we have any sale and we have received the advance in our bank balance, that should be excluded from our bank balance. Unit application pending allotment won't be the part of our cash balances, and the contract of purchase, if any, that won't be a part of our cash balances. So cash should be very clean, which is available with us for the investment.
Yeah, and just to add to what Pravesh just mentioned, please note your column D and your column G is about the portfolio investment. Don't add your temporary investment. Temporary investments have to be reflected as a quarter end only in column E. Otherwise, both will be a double number for you. So please ensure just include the main portfolio investment which you have written as per the strategy, keeping the temporary investment only as at the quarter end and not including the churning that you have done, just the portfolio statement.
Absolutely, absolutely. And additionally, just want to highlight here one thing. Subsequently, I'll let you know the relation between the subsequent tabs to each other. That will be very helpful for all of us to understand how to report the number and how it should be reconciled between the multiple sheets. And the last point from this particular table is that the cumulative principal and capital distributions. Here we will report all the capital distributions related to the commitment provided in the column B should be reported here at a cost, not at a market value. So the total commitment which we are providing in a column B, related to that, whatever the principal or capital distribution which we have made, we need to report in that particular table or particular column. But I just want to tell this, when I start this particular sheet, I mean explaining this particular sheet, I said everything is at a cost. So it means that if you refer all these columns, we are providing everything at a cost. Nowhere we are giving a market value or nothing like that. We are considering the appreciation or anything like here. Yeah. Bhavin, we can move to next sheet. Yeah, so this is the calculation of an investable fund. So we have lots of queries. Everyone is following some different methodology to calculate the investable fund. But we are now SEBI is, more sort of giving a proper clarification how to calculate the investable fund. So total commitment received corpus will be exactly the same number which we are reporting in a earlier column B, the table which we are looking at. Now, the scheme name, total commitment, estimated expenses. Bhavin, can you just, yeah. So estimated expenses, how to calculate estimated expenses? So an estimated expenses will be as per your PPM. There is no specification, whatever written into the PPM, you can calculate accordingly. But estimated to be revised in the case of, and subsequently, if any revision happen or material change happen in your calculation of expenses to your investor, that you can adjust on. Should not include any taxes like GST or anything like that. It should be net of taxes and all. It should be at a base number. And in an open-ended scheme, you can consider your expenses for a 1 year on the commitment which is reported as of the quarter end. So that is very clear that we will consider 1 year expense on the commitment of the closed-ended scheme, which we are reporting as at the quarter end. Yeah. So now, next sheet, information on investment. So earlier when we received this format and we had a multiple discussion, so we supposed to share the transaction level details, but that was very challenging to provide the details of all the old schemes and upcoming schemes at a transaction level since inception. So SEBI has allow us to give the not at a transaction level, but at a script level details as at the quarter end. So in specific to this, we are providing a detail for the investments. Bhavin, can you think previous slide?
Sorry.
Previous. Yeah. This one is correct, right? Correct. Yeah. So in this particular sheet, we are providing the details of a security level, and that will be the holding as of your quarter end. So in this particular, I'll just go tab by tab. And if you just see here, whatever the tables, the tabs we have, columns we have purplely highlighted, those are the new or some changes in that particular column. Rest everything in the sync with the previous format. So PAN of the investing company we need to provide if available. That is something which is new. Type of the investing company, drop down list will be provided, and if you refer the notes in the original format provided by SEBI, you will get complete the list of the investing company, type of the investing company. Then type of the securities, you will get a drop down list for that. Whether it is an offshore investment, yes, no, that we can give the details of. ISIN, if available, we need to provide the ISIN for those this particular scripts. SEBI registration number if the investment we are making into an AIF, and whether it is investing company is an associates, whether it is a manager, sponsor, we need to give the appropriate details regarding that. Sector related details, we have a huge list of a sector which is absolutely provided in the SEBI given format. So around 112 or 13 sectors are given by the SEBI. We need to somehow manage to incorporate our investment in those particular sectors. That will be at the end of the original format provided by SEBI. The list is given. Amount invested for all the investments, including the offshore, that we need to give the detail here. The total amount of investment in this particular column should be matching with the column D of a previous in the corpus column. So if you just want to link this number, you can link that the column D number should be column D, value of the column D and column G from the corpus details should be matching with your amount invested in this particular column. So net of that amount, the holding number should be matching with this particular column, and then the latest valuation of the investment. So this is something new which we need to give the details to the SEBI here. So all the details of investment which we will be providing in this particular table, we need to give the valuation taken by the investment manager or a fund manager at the end of the quarter for those particular investments into the fund. That is not required. That is not required as per the regulation 23 of the SEBI of a valuation. That could be the normal valuation which we are considering in our books for calculating the NAV. So that we need to give here. And for that also, what valuation needs to be captured, that is captured here. In this particular table, we need to provide the details only of unlisted securities for the Cat 3 AIF and the Cat 2 AIF accordingly.
Oh, yeah, just to add to it, Cat 1 and 2 has to give both listed and unlisted.
Listed and unlisted, and yeah.
Only for unlisted, so that synchronizes your information. We see a lot of questions. Whether you don't have a PAN, that's not a mandatory column, but advisable to take a PAN because it's expected that because if you're investing in an unlisted security, you would have taken the PAN of the particular company. In case of listed, we understand that you may not have, but in case of unlisted, it's expected that you will have. There's a question whether in terms of ISIN, how will it be? So it will be at ISIN level that you will have to disclose, because your every ISIN may be running a different series under the same investing company. So you have to disclose it ISIN level.
Correct. And details related and the clarification related, each and every column will be given in the notes to the original format of this, and you will get a better clarity when you go through those specific notes. Yeah, Bhavin, next sheet. Fine, you can move to next sheet. Yeah, information on investment. In the first slide, we were capturing only the listed, unlisted related securities. For the temporary investment, we will be giving just a holding as of a quarter end at the investing company level. So in temporary investment, we'll give the cost of the temporary investment as at the quarter end at a script level for the respective schemes. Yeah, and this number should be matching with the corpus detail ka column E, which is capturing your temporary investment. So these are some linkages which we can ensure while filling our SEBI reporting for a particular schemes. These numbers should be getting coincided with each other. Yeah. information on investor. So there is nothing new specifically here, but we are just adding a resident individual, which is basically as per the income tax law that it was missing in earlier report. We are just adding that particular this here in and this amount which we are reporting at the end of the total fund raised should be matching with our corpus detail column C, where we are mentioning the fund raised during the for the particular scheme till the date. So that number should be matching with that particular column. Yeah, Bhavin, we can move to next sheet. Information on investor. So this particular details we specifically required, specifically asked of the SEBI, because they require this detail to on their dashboard to present and ensure that how much FDI investment we are getting and all. For that, this is a specific requirement of SEBI to give the commitment number of the foreign investor. So this is a specific slide, and the tab is added to get that key how much foreign investment we are getting in through the AIF in India. So we need to give the commitment numbers here.
And just to add to this, your NRIs is not your, the way we usually read is NREs and NROs. It is just non-resident investors. So anybody who's an NRI, basically they want to understand which jurisdiction gives you the maximum funds, where are the NRIs mostly based. So don't differentiate between NRE and an NRO. This NRI is a plain vanilla NRI, somebody who is not resident in India. That's it. So that's how you should capture this information in this data sheet.
Yeah.
Okay, a simple format again. This is basically to check compliances that we have done. Please note, whatever data that Pravesh actually took you through the entire slide was mostly since inception till date, but this data sheet is only for the relevant quarter. In case you have sent out a consent notice for the purpose of whatever reason, it can be extension of term, it can be investment in associates, there was a change in commercial, this all needs to get captured in this particular sheet. Only one thing you need to be careful, there is nothing called a deemed consent. We did discuss and we had a lot of discussion with SEBI on this, and SEBI said SEBI does not recognize anything called deemed consent. Either you have got a positive consent, either you have got a negative consent, and you have got no response at all. It is by virtue of your agreement that you say if you do not respond, then that will be considered as a deemed consent. And did you go ahead with it? That's what will get captured over in the date of finalization, whether your proposal is approved or rejected. If you have chosen that your no reply, for example, 75% of your investors did not reply, and you have written virtually in your contribution agreement that if in case you do not reply, and it will be considered along with the positive vote, you have gone ahead. So your answer will get reflected in proposal approved or rejected. Don't convert the no reply into a positive consent in this data sheet. That will be considered as a non-compliance for this data report. Very, very important. No reply is a no reply. Please capture your percentage terms over there by value of investment. So you will go by the same formula that is written in the regulations, and you will straight away capture whether did you go ahead with it or not. If in case SEBI wants further details on it, whether why did you go ahead, there is an answer to it, that there is considered to be a deemed consent as per the contribution agreement, but please do not change any of the percentages over here. Very, very careful on this particular data sheet. While there are certain drop downs that you will see in column number proposal related to, we have also enabled something called others. If in case you choose others, there will be a section which will open up for you to write why did you give the consent or why did you go ahead with the consent. That's where you need to capture. If you do not see any of those drop downs being relevant to you and you have enabled a consent as per your contribution agreement, we move ahead. Yeah, Pravesh.
Yeah, I think we capture almost everything from the investor consent, and we can accordingly report and we can close. But just one thing, that the consent which are got closed during the quarter, only those consents should be reported here, which are in a proposal or which are is ongoing, that we can hold on and we can report once it get concluded in that particular quarter.
Yeah, Pravesh, you want to take this borrowing?
Yeah, Bhavin, we can go to next slide.
Yeah, sure. So I'm just let me quickly take up the details on borrowings. Again, this is a fairly similar reporting format to what we were seeing earlier. There will be a drop-down list available, which will have a list of requirements or purposes. Purposes could be for meeting operating expenses, for temporary funding, for any advance investment to be made. So those drop-downs will be present. You can choose from them. And then, the rest of the fields are fairly self-explanatory in terms of putting the amount outstanding at the beginning, the date on which the borrowing was done, the investable funds, so that we can clearly observe what percentage of the investable funds was borrowed, the amount borrowed during the quarter, the repayment date, and the repayment amount. And lastly, the amount outstanding at the end of the quarter. So that is basically the table or the list of fields for any borrowing done by the AIF. The second is really again a brief disclosure on any pledges, if applicable. So simple responses in terms of the name of the scheme where there has been any pledge, whether we have pledged its investment in the investee company, a yes or no response, name of the corresponding investee company, and the amount borrowed. So that's a quick wrap on how the leverage and the pledge section will work.
So Bhavik, just want to highlight here one point that specifically in the last earlier reporting format, SEBI is not asking for the purpose. I mean, that is operating or other purpose, that was a general, but now they are asking a specific purpose for the borrowings, and we need to give the appropriate details for that particular borrowing. And the pledge one is the new one, which was not a part of the earlier reporting. So any pledging which is done by the AIF for borrowing the funds, that we need to report from subsequent reporting.
So quickly to take up a couple of requirements from a reporting standpoint. Firstly, valuation. So again, a simple principle to be followed in terms of the basis of or the characteristics of the security. When we are quoting valuation for any listed securities, the valuation to be done as per the quotes available as per the stock exchange, which is the last traded price. For unlisted securities, we will rely on the last available independent valuation report. And in case of fund-of-fund investments, we will go by the NAV provided by the underlying fund, because the underlying fund has already conducted its own valuation exercise as per SEBI norms. So for FOFs, all we need to do is quote the applicable NAV. So that's really a quick one on how the valuation reporting is to be done as per the revised format. To quickly move over to the next and fairly important clause on section on fees and expenses. So this is very critical, and let me spend a minute on the background to this before we take you through column by column what the reporting requirements are. So the substance and the summary behind this section getting added is for SEBI to be able to verify that for all distribution payments post the recent clarification and circular that came in with regards to restriction on upfront investments for Cat 3 funds and a limit for upfront distribution fee paid on Cat 2 funds. So really SEBI's intent is for this schedule to clearly put across the data so that they can make out whether compliance has been done with those respective circulars. So again, to go by this field by field. So of course, this detail is needed at a scheme level. So you need to put the name of each scheme, then the percentage management fee per annum. So this is the per annum management fee that the manager is proposing to charge in the AIF, which will be captured in column B. Column C will be the tenor of the scheme. So this is the tenor that you put across in terms of the communication to investors. So this will be captured in column C. Column D is basically a multiplication of the management fee applied by the applicable tenor of the scheme. So for example, if your management fee is 2% per annum and you've put 2% in column B and your scheme has a 5-year tenor, the total management fee put in column D will be 10%, 2 into 5, which is 10%. Column E, we need to input the upfront distribution commission paid. It's important to clarify here that upfront distribution fee will include any lump sum fee paid to the distributor at the time of onboarding of the investor. There are several nomenclatures that we use. We call them placement fees, setup fees, upfront distribution fees, or any such name that we may choose. But whatever is paid out upfront to the distributor needs to be captured in column E. And the last column, which is column F, needs to capture the trail commission that we look to pay to distributors on an annualized basis. So this is the percentage per annum that needs to be put in column F as the trail rate that is payable to the distributor.
Correct.
So that's a quick summary of how the fee section and reporting needs to be done.
Bhavin, I would like to take 2 minutes on this particular sheet.
Sure.
Many of people are raising a question on this particular this. So if you read note number 1, so management fees percentage per annum should be your weighted average fees percentage on your commitment. So let's say take an example. If we have 2 classes having a 1%, 1 crore commitment in particular class and 1 crore in another class, which is carrying a 2% fees rate. So our weighted average rate in particular this will be 1.5% per annum. That's how we need to report the management fees percentage per annum, which is weighted average to your class wise commitment, irrespective of your actual fees calculation base. It could be a AUM, it could be a contribution, it could be anything else also. So we are keeping that in a sync. And then tenure is as per the regulation, the SEBI master circular, which is issued on July 31st, 23. Basis that you can mention your tenure, that is the sum of this, ultimately the multiplying by the tenure, you will get the total management fees percentage which you are paying or charging to the investor. And technically, while providing these details of the upfront distribution commission and the distribution commission on a trail basis, anything, so SEBI basically want to see that anything to the distributor which we are providing with whatever name we called it, some may say setup fees, arranger fees, whatever name we call it, if anything we are paying to the broker or a distributor or a channel partner as a upfronting, we need to provide here, and anything as a trail we are providing to them, we need to capture here. So that is the ultimate objective, to cover the new regulation which is applicable from the first May 23. So that's the gist of this particular requirement.
We move to the next slide, which is details of warehoused investment. This is basically in line with whatever disclosure norms SEBI has been requiring in the new PPMs. As you would have observed, whenever you file a new PPM, SEBI has been asking you to include information as to exactly when will you commence your warehousing, when will you, within what is the timeline that you will transfer your warehousing investment. And there's a new circular and a regulatory change which says that if in case you're doing a transaction with your associate, you need to take consent of your investors, which includes your warehousing entity as well. And that's the reason, if you see, this sheet captures the entire essence of the circular. First, what is the final close of the scheme? Have you transferred or not? So this has to be within the timelines that you've written in your PPM. What is the type of the investment, the detail of the warehousing entity, whether it's a part of your associate. Associate will mean what is defined under the AIF regulations. If it is an associate, the next question basically will be whether have you taken consent or not from the SEBI in terms of inspection. But you just need to capture for the purpose of this quarterly report whether this will be value of warehoused investment, which is the cost of investment. Usually what happens is in your PPM, you usually end up writing warehousing will be transferred at 15% IRR. As you would know that if you are transferring with an associate, it has to be a fair market value because it's a conflict and it has to happen at a fair market value. You need to ensure whatever is the cost of warehousing investment that the fund has taken hit on. This is the cost that is expected, not the original cost of investment, but what the fund will end up paying to the entity with whom you have done your warehousing. And second, whether you have disclosed to the investors, as you would know that in your PPM, you end up writing that at the time of signing my contribution agreement, I will disclose to my investors whether there is a warehousing. And after signing the contribution agreements, I will periodically disclose to my investors. Please ensure whatever is applicable in your case, please ensure you're capturing this either in a yes, no, or not applicable. The next is reporting of suspension. This was not a part of the earlier reportings, but because there has been a usage of these rights by the by the AMCs, and also under the SEBI circular, there is a requirement that immediately when there is a suspension, you have to report. That is the reason SEBI is expecting that if in case you have suspended a redemption, please ensure you're reporting, and also please ensure you intimate SEBI at the earliest possible. There is no timeline written for it, but when you're doing a reporting submission and you end up not reporting to SEBI, don't consider this in lieu of any other reporting that you have to do to SEBI. This is just a quarterly reporting format. So if in case there is an obligation under any of the regulations or circular to report independently to SEBI or to investors, please ensure you do the reporting independent of whatever you're writing in your quarterly reporting. And the last is a submission of PPM audit report. This data will go away in some time because there is a new reporting format that SEBI is expecting to launch with respect to PPM audit. The only intention is whether you have done the PPM audit, whether you have captured and done a reporting to SEBI within the timelines that the regulator is expecting. Having said that, this may undergo a format in some time, undergo a change in some time, but till that time, it continues to stay in the reporting. So just give the dates and documents submitted, yes or no, and the date of submission. No other information is expected in this particular column. We move ahead, Bhavin. Okay, this is very interesting. As you would know, there is a regulatory change which talks about whether compliance officer has reported non-compliance to a regulator within 7 days of observation. So this is the sheet which is expected to capture a compliance with that requirement. So if in case you are a compliance officer and there is an impending non-observation of non-compliance which is happening and you need to report, please ensure whatever you report to the regulator is appropriately captured over here, because this will be a point which will be picked up in one of your inspections that usually happen with SEBI. Then your CTR report, this again format, it's going to get tweaked because there is a different reporting mechanism that SEBI is working on. They don't want the huge compilation of CTR being dumped on their head. They wanted everything to be online. So this will be a compliance list report. So the date will start, as you would know, the process is you have to submit the CTR to your trustee and your sponsor. Your trustee and your sponsor has to get back whether they have observed any non-compliance. And if there is an observation which the trustee believes is non-adherence to the AIF regulation, they have to report to SEBI. So all these 3 compliance requirement is getting captured over here. If you see, there is a date of submission of CTR to trustee and sponsor, whether there were observations, the date you intimated these observations, and what was the response at your trustee. So usually what used to be the practice is you used to send a mail to the trustee and sponsor. They never used to look into it, and it was deemed that they have accepted it. There is no non-compliance. Now here it is expected that the trustee also looks into the report. If there is an observation, they have to get back whether they believe you have not adhered to the compliance and regulation. They're supposed to get back to you. And if there is a deviation, you're supposed to report to SEBI also. So all these legs of compliances will need to get captured in your table number 7 appropriately. And brief description of observations, you can be very crisp about it. There is no upload mechanism which SEBI has inbuilt, at least for the quarterly report. But over a period of time, when this CTR report culls out and there is an online reporting mechanism that will come, and upload mechanism will be built in for you to upload your reports in detail, because here you can maintain it crisp. Don't go with 2,000, 3,000 words over here, because it may not get captured. And when you actually convert it to an XML, it will throw errors to you because there may be unwanted space, unwanted columns. So please ensure you don't have those requisite enough number of brief write-up getting captured. Just put it very briefly, and then over a period, if SEBI comes up with any details, you can send it across to them. We move on to the next one, Bhavin. Okay, as you would know, in terms of complaints, when the investor charter was notified, there was a requirement that AIFs will maintain complaints on a quarterly basis. And what was supposed to be done was never disclosed over there. The intention was to get it captured over here. So whatever data or report that you are intending to maintain in terms of your quarterly complaints has to get captured over here in terms of wherever you got, either it is through scores or it is directly, because this number always ensure whenever you're doing a PPM updation or a new PPM launch, ensure that it is matching. Don't have a different data over there and a different data over here. Somebody has posed a very interesting question which talks about smart ODR system. ODR is a dispute resolution mechanism, which means it's not a complaint. It has moved from the stage of complaint to a grievance or a dispute. So it will move to the next column, which is details of arbitration, because ODR is also a portion of arbitration that you will do. So that will get lodged over here, which is the second column, which is table number 2, is where it will get captured. Please ensure only the complaints and grievances are capturing. If you see, SEBI does not classify between a grievance and a complaint. It is as per your investor grievance redressal mechanism that if you have classified, for example, I have not got an account statement, is a grievance. Okay, my account statement has a wrong information, is a complaint. So you need to, as per your internal policy, be very clear what is a grievance and what is a complaint. The intent is to capture complaint and not grievance. And then when it moves from the complaint mechanism to a dispute resolution mechanism, that's when your details, if in case it's not in ODR, but any other arbitration or a dispute resolution mechanism that you're running, please ensure the information is getting captured in the table number 2. We move ahead, Bhavin. And leverage, this is the same old report, while slightly synchronized, which talks about what is the net asset value, the entire, so exactly the additional information that is getting captured is a breach, which was not getting captured in your earlier report. So the intention is, while you report everything in the column number, which is table number 1, if in case there have been instances, and still now I know everybody will complain, but this still you need to give a date-wise reporting over here in terms of your leverage exposure. The intention is to see, have you breached the leverage at any point in time during your entire quarter. Second is the details of reporting and rectification. So if in case you have observed while reporting your earlier column, there have been certain breaches, there are certain actionables under the SEBI circular which says that immediately before 10 a.m. you have to report your investors. Before the EOD, you have to rectify the position. All those information you have to capture in table number 2 in case you have seen those instances. If it is not reported, if it's not falling within the line, this is a particular non-compliance the SEBI is going to catch. So please ensure all those breaches also get reported in your table number 2. That's it. Thank you so much. We're happy. We see a lot of questions. We'll pick up those questions now and we will steadily respond to it line by line so that we don't miss out anything. As Bhavin said rightfully at the beginning, we will be doing a recording and this will be hosted on YouTube of Equalifi. So please revisit it in case you have joined in late for any reason. So the first question was, is it a reporting for the September quarter to be done before October? The answer is yes. For the existing format, as you would have seen, Bhavin, if you go to the slide number 1, there are certain timelines which SEBI has given. For April to June quarter, you have to ensure that your reporting happens by 15th. For the September quarter, you will continue to do old reporting by 10th, which is the original timeline. Otherwise, it will be treated as non-compliance. Please be careful. Don't miss the reporting. The new format will be done by November 15, which means your existing compliance norms of filing your reporting. So for September quarter, you will do 2 reportings. By 10th, which is the original timeline, you will do in the existing format. And the new format, you will do it by November 15. So this is the timeline. The table, if you can see, you have to do for 2 quarters. The intention is to run a dry run and see if there are any observations, what issues people are facing. You need to write to SEBI or you can write to us. We can compile it and send it to SEBI if there are any teething issues when you are filing it, because SEBI intends to revamp its IT portal system, and whatever complaints or issues that you are facing, SEBI will be ensuring that the IT team rectifies those by the time you actually go live for your December quarter. So that's the intention. For whatever reason you're not able to file it by that date, please ensure that you report to SEBI for what are the reasons you're not able to file, and please ensure reporting, because these timelines are issued in a SEBI circular. There are no exemptions to it. So please start. So basically the intention is you've got an entire month now to do your old reporting format for June, which will be followed. There are a lot of, and the reason why SEBI is doing it is because when you do April to June, there are a lot of information which are save as, for example, name of your scheme, the address of your sponsor, the address of your trustee. It will get auto-populated in your September quarter report. And that's the intention. They also want to do for you to do the April to June quarter as well. So that's one. We will be sharing this information. Do we need to submit data in an Excel format now? I think the answer to this is no. You still need to punch it on the portal, right, Pravesh? Or you have an upload mechanism?
Yeah, it will be the same. So we have suggested SEBI that to avoid these errors while uploading and all, we should have some pre-validation kind of thing in the this our XML only. So that SEBI is looking after, and accordingly they will update the format. And also in the SEBI, wherever the drop-down list is available, there won't be that field won't allow a manual intervention. So earlier, what used to happen, we used to type yes, and everything is required in a caps, let's say. But while manual intervention was allowed and we are typing in the small characters, so that used to give the errors while uploading that. So that will be somehow they will be, I mean, SEBI is working on it. So technically it will get sorted out.
Yeah. Thanks, Pravesh. And the next question is, beyond extended term would include liquidation period? The answer is no. Your liquidation period is just 1 year. So I'm sure you're referring to the generation, which is the liquidation scheme information that you were talking about. So if you see, beyond liquidation term just means 1 year, and after that anything is like a liquidation scheme or in specie distribution. So it will not include your 1 year liquidation scheme. It is considered to be well within compliance of that. We have a question for open-ended scheme. Total corpus changes after initial close. How to address in reporting? So this is a quarter-end reporting. It will get captured, right, Pravesh?
Yeah, absolutely. So for the commitment perspective, we need to consider the commitment as at the quarter end, which is available into the scheme as per the details and the definition given to capture the commitment. And as far as the investable fund is concerned, while calculating the investable fund, we need to consider the expense for the 1 year as per your respective PPM on the commitment which is available as of the quarter end.
Yeah, thanks, Pravesh. Then there's a question which says, should this include only schemes that have been taken on record as on the quarter end? That is, schemes that have been wound up but include not launched but approved or received, we should provide all take. I'm sorry. So the question, basically what I can summarize is, if you have filed a scheme with SEBI and SEBI has not taken that scheme on record, should it get included? The answer is no. This is for the schemes which SEBI has taken on record. If in case your scheme has got wound up during the quarter, that also needs to get captured because this is a YTD. So it's since inception till date information. So that will need to get captured. And if you're fully paid, so if you see the lot of information which talks about, have you fully paid, have you not paid, there is a liquidation scheme. So an entire chain. So this is like information as on date since inception. So both the schemes will get captured, but you can ignore the schemes which have not been approved by SEBI while doing this particular reporting. Okay. Okay, can we write NA if liquidation is not applicable? Absolutely, you can write NA null. So there are options. Please don't use fancy English over there. Just use the drop downs. They have written what you can write, which is yes. If you see a yes is Y in caps and YES in small. Please use the same font they have written on the header of the table to avoid issues when you are trying to upload it. If there is no liquidation scheme, we just answer to that. If there's no liquidation scheme, then it is not mandatory for you to fill in. Just put in NA and move across. Okay. Okay, that's to you, Pravesh. Total commitment received as at the end of the quarter. Will this exclude partial redemption capital amount or full redemption capital commitment to be excluded?
So it is clearly mentioned in our PPT as well as the sheet given by the SEBI that whatever the commitment we are considering as of the quarter end, that should be net of all the exits, redemptions and the forfeiture or capping of commitment or the reduction of commitment, that should be net of that. So whether it is a partial or a full, accordingly we should be reducing the commitment from the total commitment.
Yeah, and there's a follow-on question, Pravesh, for open-ended schemes, which says that for open-ended, do we need to reduce redemptions from the total commitment? The answer is yes, and Pravesh
absolutely,
can
absolutely.
I see a lot of questions on the schedule on fees. So let me just group some and take them one by one. Firstly, I think the most common question is if there are multiple classes, how do you report management fee? As clarified earlier, the reporting needs to be done at a scheme level. So say, for example, in a scheme, you have 5 or 10 different share classes and you've raised funds in each of these 5 or 10 different share classes, just do a value basis weighted average of the management fee. So for example, to just build on that, say there are 2 share classes, you've raised 5 crores in a share class where the management fee is 2%, and you've raised another 5 crores in a share class where the management fee is 1%. So for the 10 crores, you need to put a single value of 1.5% as the weighted average.
Correct.
This management fee shall also include sponsor contribution. So when you accumulate all the share classes, sponsor is also one of the share classes. So please include that as well, is my understanding.
Yes.
And the other variations that we are seeing is this applicable only to investors coming post 1st May 23 or from the start date? This is absolutely every field in the fees column is pertaining to all commitments that come into the fund post 1st May 2023. Please do not populate any back-ended data prior to May 1st, because there is no verification or no value to SEBI of that data, and it will just end up confusing your entire reporting to the regulator. So please fill in all data with respect to 1st May 2023 and all investors onboarded post that date. In open-ended fund, how to put tenor? Just keep it NA. You don't need to put a tenor. In fact, for open-ended funds, my sense is there will be no upfront fee paid. So in any case, the fees data will be put in, but upfront fee will be 0. So don't see an issue per se. Let me just check if there is something else.
Yes. So Bhavin, there is one question that if we receive a contribution post 1st May, so technically the details for the fees which we are providing, that is related to the commitment and not related to the contribution. If we have received the commitment prior to 1st May, then technically we should not be giving any details for that particular commitment, irrespective of that whether we receive a contribution in next coming 2 years.
So again, to simplify this and put this in simpler language, any drawdowns that you get for old commitments don't need to be dragged into this reporting format and requirement. If distribution fees is paid from AMC, do we need to include? Absolutely. All fees paid to the distributor, whether from the AMC books or from the fund books, needs to be reported. I think that is all on the fee section. Leela, there is another one on moving AIF units to DMAT. Maybe you want to take that. So let me just read the question out. There was an email on moving AIF units to DMAT. Why this move, and is this applicable only for new investors?
No, this is not for new investors. This is basically capturing the information. So please don't connect the dematting of units and dematting of investee companies with this. This is plain vanilla typical reporting format that SEBI expects for monitoring compliance. As Bhavin took it at the beginning only. This is basically, there have been a lot of circulars in the last 2 years since the time we had a new format, and SEBI wanted that the reporting format becomes lean, to the point, and capture. This has got nothing to do with your dematting or non-dematting. Nothing is getting captured with respect to demat. So that's a very different exercise that SEBI is working on. This is just to see the general compliances. So please don't connect with this.
Yeah. So there is one question on management fees. Usually, so management fees, I'll just read out the question and I'll answer. Management fees is usually not computed on the capital commitment, but on the fund AUM. So what is the sense of taking the weighted average on the capital commitment? So just to answer this question, so irrespective of your base of computing a management fees, upfronting whatever we are paying, technically we are paying on the commitment itself. So there is no sync as such. I completely agree. But when you compare everything as a base of the commitment, upfronting you will give as a commitment base. Whatever the percentage you will give on commitment. You charging your fees or arriving at a weighted average number, that is also on the basis of the commitment. Now, technically, when you charge a management fees, percentage won't change, but there is a possibility that your commitment number might change. Other than commitment, it will be an AUM, but your trail will be calculated basis your management fees only. So technically, overall, if you understand and see that ultimate output, what we are giving to the SEBI, that will serve their purpose. They just need to understand whether we are within the regulation of 1/3 or not. That is the whole objective. So that will any which ways get covered here.
I think this is the section which has the maximum queries. So I'm responding to another and laying it out for everyone's benefit. If there is no upfront fee, no need to fill up management fee details. Please keep the upfront fee section as blank, and please make sure the other fields are filled in.
Yeah, there is fairly possibility, because if you see the regulation, we can't give a upfronting in Cat 3 AIF now. So technically, in all the Cat 3 AIF post 1st May, the upfronting will be nil only. We need to give the details of the management fees, as well as we just need to give the details for the trailing, whatever we are paying to the distributors. I'm surprised that there is no question on the valuation part, the regulation 23. So I'll just want to highlight a couple of points there on the valuation part in the others itself. So in valuation, as per, if you just go through the regulation 23, they are talking about the valuation of the unlisted scripts. And in the case of a cat that is specific to the Cat 2 AIF, and in Cat 3 AIF for the open-ended and close-ended scheme, for the listed debentures and the unlisted scripts. But in this particular table, as per the requirement of SEBI, we need to provide the complete portfolio valuation on the given particular date, and date will be captured whatever the latest valuation available with us as per the regulation. So as per the regulation, we need to calculate for the Cat 2 AIF on the half yearly basis, for the Cat 3 close-ended Cat 3 AIF on a quarterly basis, for the unlisted and the listed debts, unlisted securities and a listed debt, and for the open-ended schemes, open-ended Cat 3 schemes, we need to do on a monthly basis. But while giving the details, if you read the complete details and the section, the notes given by the SEBI and all, we have given the complete details that we need to provide the complete and total valuation. For the listed scripts, we can consider the valuation as per the exchanges, and for the unlisted part, we need to consider the valuation provided by the valuer. Now there is a question, what is the possibility that if we are releasing the report by the 10th or the 15th of the subsequent to quarter, then we won't be having the latest valuation with us. So that is also fine. There is not an issue. We can consider the latest available valuation and we can mention that particular date over there. So by that, we need to provide the complete and total valuation details basis the latest available valuation sheet from the independent valuer.
So we see a Cat 2 consent obtained from 75% investors and accordingly valuation done on yearly basis. So you will continue to say it's yearly. So this is as per, so they have left the discretion to you, whatever internally you have taken an approval, you will continue to say that it's an annual approval. So you'll continue to use the same valuation for whatever timelines you're using as per the consent. Yes, if you have not raised any funds from your investor, please note one thing, there have been SEBI orders where people have not filed their quarterly report even after receiving an approval from SEBI, and there have been SEBI orders for it. Please ensure that if you've got a SEBI approval and there is a scheme approval which is taken on record by SEBI, if it is nil, please write nil and file it with SEBI. Please meet the compliance requirement of this. Otherwise, SEBI has been that there are actual specific orders for it. So please ensure you meet those requirements. Even if it means nil and zero, please file it. So in case of specific nuance from the angel fund, everything remains the same for you. Nothing changes, because if you see, angel fund is not, while I understand operationally every security works as a different scheme within the angel fund, but whenever you do a reporting for an angel fund, you need to compile it as one and look at it from a holistic picture. There was one more question which spoke about the consent for a scheme. So that in that case will be, if you see, the denominator by value of investment will be for that particular investee company. It may get slightly changed for the angel fund depending on security to security, but at the end of the day, most, I think 70% of the reporting will be at a consolidated level for you, except for few nuances which you will take at a security level. What is the difference between date of launch and date of initial close? The date of launch is when you officially start accepting application forms, and date of initial close is when you officially do an allotment and say that it is an initial closing. I'm going to allot it at face value. That's the difference in terms in the perspective from SEBI. Okay. Then there's a question which says Cat 3, which opted for NAV as a basis for maximum concentration limits for investment in listed. Does investable funds computation is mandatory? The answer is yes, because the perspective and the reason for taking investable funds is very different. They are not looking for a single issue limit monitoring for you. They just want to understand what is your investable funds, irrespective whether you use it or not. Because if you see, only your listed security has to be done on NAV. Other things have to still be done on investable funds, and that's the purpose for capturing. So irrespective of whatever denominator you have chosen for monitoring your limits, you have to give an investable funds.
There's another example on repayment and how you arrive at capital distribution. So if you have investments of 5 crores and the market value of it is 10 crores and there is a redemption of 2 crores, then what will be the capital distribution to be repaid? Simply this will be 5 crores, which is the cost of investing, minus the cost of redemption / exits, which is 1. So you will be reporting 4 crores. 5 minus 1 basically as the cost base of the investment.
So there is one question that if we having a multiple dates of a valuation, as if we have a listed securities on a respective dates, we have a valuation available at the end of the day, and the unlisted which we have, let's say for a previous quarter or a previous a month, then in that sense we need to give the report for that particular month only, for which we have a certificate of a independent valuer. For that particular day, we need to give the total valuation of a portfolio, stating a date, absolutely the same date, which is on which we have done the valuation. So we need to give the complete portfolio details and a valuation on that particular date.
I think there is one for you asking, is compliance officer a KMP?
If you have not identified it as a KMP, then it is not, because the circular specifically says somebody who is involved in the management and decision making of the fund. So those people have to be identified. If you recall the way a PPM is drafted, you will always say 1, 2, 3, 4 people are identified as key investment person, and then you put a separate table down and say, okay, we have identified a compliance officer as per SEBI circular, and this is the compliance officer. If this compliance officer information is in the list of KMP, then he is a KMP. If you have not identified that person as a KMP, then it is just plain vanilla compliance officer, not identified as KMP.
So total commitment is absolutely post reduction of the redemption and the reduction of capital. We need to show the net commitment and all related other details in the corpus details. We need to provide it for those particular commitment only, which we are reporting in a column B in a corpus details. Do we have to include the derivatives in the investment calculation? Yes, we do have to include the derivatives, all the transaction related details we need to consider, and we need to report as of the quarter end.
Okay, we have a question which says whether there are any observations, comments on the CTR. We generally don't hear from trustees. Assume it is at deemed yes. No, it is not assumed as deemed yes. Please ask your trustees and your sponsor to respond. And that's the entire intention of the regulator, is the trustees can't sit silent on the CTR submitted. Either they will say they have taken acknowledgement, or they will say, okay, we observe 1, 2, 3 non-compliances. Please ensure further action is taken. There is some expectation from the trustees to respond to this. And if they have not responded, the answer should ideally be no rather than saying NA. So I would suggest that trustees, whoever are attending, please ensure you report to this, because SEBI was very candid about this, that we hear trustees don't even look into the CTRs being reported. So SEBI wants some actionables from the trustees on this.
How we to arrive at estimated expense for a 1 year, and some expenses are not recurring in nature. So absolutely. So in open-ended scheme, at least for the quarter, we are aware that at end of the quarter, we can estimate the expenses as per your PPM, whatever the expenses allowed, and basis your experience and everything, you can consider some percentage, and accordingly you can calculate the expenses. And if there is a major or any big unforeseen event happens and the expense numbers get drastically changed, there is a option or the clarification given by SEBI. You can adjust your investable fund for the open-ended as well as for the closed-ended schemes. But everything should be within the restriction of the PPM.
There's another question on provision for principal, which is directly written off. So for any investments where you've written them off, you will need to reduce that from the cost. So and report that accordingly.
So somebody is asking, what is a domestic developmental agency? So this will be the likes of your SIDBIs and SREI, whose objective is to do fundraising and support the VCF industry. So those are the people who will be captured under your development agencies.
So maximum investment for the angel fund will be calculated at the entire fund level and not at the individual investment level.
Another query on transfers, transmission, and principal repayments, if any, should not be considered. Basically, don't make any adjustments on account of these three when you report the corpus.
So provision for any principal that you can specifically mention, if you are sure of or you are writing of that particular investment, then you can consider that as a divestment. So technically you won't gonna receive any fund. I mean, you won't be receiving anything from that particular investment.
I think we are slightly going beyond reporting, but happy to take queries next couple of minutes at least. So can an AIF do an allotment of units without calling it a formal closing? Does every allotment date constitute a closing? Again, my understanding is any allotment is a formal closing. The PPM has an enablement for you to do subsequent closes and multiple closes at that. But any date on which you allot units is a formal closing date. And I think the most important question, given we are at the fag end, is post the session. In case of any doubts, is there a way to reach us? Of course, please reach out to the Equalifi team at equalifi.org. Also, feel free to post any queries, on either the website as well as the YouTube channel. We'll try and pick all of them up periodically and respond to them. So that's critical. And I think also from a experience standpoint, when you deal and try and upload all this data on the portal, my suggestion would be to not leave this to the last date and possibly familiarize yourself with the portal beforehand as well, which I'm sure a lot of you would have done. And if at all you face any issues, feel free to raise them, to the Equalifi team and through them to us.
Yeah, so in reporting format, if you also look now, many of the queries will get sorted from there itself, because this time the format is very so much clear and in detail. So they have given the definition for each and every columns wherever possible, and try to avoid any confusion or the misreporting or a different reporting for the single objective or a single column. So clarification for the each column and each tab is appropriately given in the reporting. You may go through that, and accordingly you can arrive at some solution or conclusion. Or as rightly mentioned by Bhavin, you can reach out to us through the official portals. We will happy to help you out.
Sure.
So there is one question, I think this is a good one. How to compute percentage of a distribution commission paid on the trail basis? Does it means the distributor share which will differ from the each distributor? Yeah, in that case, what will you need to do? So basis, you need to take a weighted average at a distributor level while calculating the trail paid to the distributor. And accordingly, you can give the appropriate percentage to your trail fees to the at a distributor level. So you need not to give the detail at a distributor. You can take the sum of all the distributor at a weighted average level on the commitment, and accordingly you can share your details in that particular column. Likewise for the upfronting as well, the same question applies to the upfronting as well. In upfronting also, there might be a possibility. Some are having some higher rate, some are having a lower rate. Accordingly, you can give the weighted average at a distributor level. So details need not to be given at a distributor level, but the number will be at a weighted average, including all the distributors.
I think the questions are fairly done, and I think we are right at the end of our allotted time as well. So on behalf of everybody at Equalify and Pravesh and Leela, thank you so much everyone for joining in. I hope you found the session useful, and as I said earlier, we will make sure this is available through the recording of the session is available for you to go through this. And of course, if there are any follow-on queries, feel free to reach out to Team Equalify. We'll be more than happy to assist you then. Thank you so much, everyone. That's it from my side.